All right. Hello, everyone. Welcome to another episode of Market Trading. I am your host, Vays. I kind of like these Saturday streams. They're just a lot more relaxed. I don't know what it is. Like my day is supposed to be the same Monday through Sunday, but it's so great that the stock market's not open, so I can start these streams a little bit later. And I don't know, for some reason, the weekends are relaxing, even though as a Bitcoiner, nothing changes. Let's go to the charts. I'm going to try to do a weekly overview of stuff and then maybe go to your questions. I would love to talk about everything other than markets and trading. I caught up on so many Senate hearings over the last week. I'd love to discuss that, but I need people to discuss them with. I don't know. I gotta rethink my YouTube situation here. Let's do an overview of the charts. Maybe I'll just go through my list of stocks. Can't go through them all. And we'll see where we'll see where the show leads us. Most importantly, Spaces. The Financial Summit will be hosting Spaces at 2 p.m. Eastern. Right now it is 11:35 Eastern. So at 2 p.m. in 2.5 hours, there will be another Saturday weekend overview of the markets. So just go to the Financial Summit Twitter handle. If you're not following, please follow. And Spaces will take place at exactly 2 p.m. Hopefully, there'll be other great speakers. I've shot messages to a couple of finance people. Hopefully, they'll join us. All right, the Financial Summit is, of course, taking place in the UAE, November 5 to 10. Great event for traders and other financial professionals. All right, what chart should we start with? Let's just go to the daily chart. Yes, well, on Thursday, we had a green star candle, which activated a bullish trend for the next consecutive MRI top. However, Friday afternoon, the market didn't do very well, and we've already broken the count. So we will not get a second consecutive MRI top, but we could get another green star candle, which happens quite often. You saw it over here. You saw actually 3 green star candles. It did not materialize into a big upswing, but it didn't actually crash us either. Pulled back a little bit more with the red star candle, ended up giving us an MRI buy. So even if a bullish trade was taking place here, it didn't exactly make people go broke over here, and then it gave you an even better buy-in indication off the MRI buy. I was, of course, hesitant on this MRI buy because it took place in consolidation. I was not hesitant at all on this MRI buy. I was very clear how beautiful and perfect this MRI buy was. I might have even said this is a little too perfect, but it worked out for an incredible upswing. I waited until Monday to enter bullish positions. So that took place right on this candle, and that is reflected in the 4-day chart. Let me load these up. That is, of course, reflected in the 4-day chart with the allocation that we are now 100% long in Bitcoin. We will have a new candle starting in the next 8 hours, going into Sunday. And I don't see why this 100% bullish position is in jeopardy at this point in time. Back to the daily chart, consolidations tend to lead to continuations of trends. If we go backwards, we saw that right here. Consolidation after a big drop led to another big drop, which led to another consolidation, which I was anticipating would lead to another big drop. We broke above the consolidation, which is not statistically likely, but just because something is not statistically likely doesn't mean it can't happen. It did not amount to anything significant. It only broke the 50-period moving average, not the other two. It eventually went back into the range, and this time around, it did break down into the statistical direction. Of course, the FTX collapse assisted that. We consolidated once again, and once again, the more statistical probability was that Bitcoin would take one more leg down. I personally did not like this consolidation. There were signs that this could be the low, but I did not like this double bottom. I actually anticipated us to make a low sooner. We did make the consolidation at a slightly higher than the top, like $1,000 higher. I thought that it was not high enough to consider this to have a high statistical probability of a breakout. Maybe you can say it was at best 50-50, since this consolidation did not technically take place at the low. This is the low, and the consolidation took place probably a full $2,000 higher. No, not that much. Only $700 higher. 800, yeah. So not that high. Now, you can make the argument that this consolidation did not take place at the low, and therefore there was a decent probability of a breakout. I did not make that statement, nor would I in hindsight as well. At best, I would say this is 50-50, but I'm pretty sure that here at the low, I was still more bearish than I was bullish. Though I was acknowledging this could be the ultimate low, I had at best 50-50 that we were not going to break this low. I did, however, start becoming more bullish once we broke out of the 20,000 range. I'm not going to sit here and say I was bullish back here. I might have been. I don't remember. People will have to fact check me on that. But I'm pretty sure I was starting to become bullish at the break of 20. I was anticipating a big resistance take at 25, taking us back to 20. And then I was anticipating a reversal from 20. And I'm now on the record that we are not going back below 20. And we'll see how that works out for me. Okay. Let's go up the counts. This is still the weekly chart in a slightly different look. For a few of my friends that stopped watching me a while back that I know are watching now. This is a great chart because I went back in history on a weekly scale, but I'm going to just make it monthly just so everything fits. So this was my look back at my personal history of talking about Bitcoin, except here. Here in 2013, no one knew who I was. So this one, you can't fact check, but you can fact check the rest. If you care to go back through history, my YouTube channel started in October of 2016, I believe. So in order to fact check May 2016, you will need to either go and you probably have to go to the World Crypto Network YouTube channel. But these are probably somewhere on my YouTube channel in the back there somewhere, assuming those videos aren't shadow banned. So these are all the historical times where I was as bullish as I am right now. Now, I don't have the listing right now. And these were my reasons. Again, the moving average stuff applies to the weekly scale, not the monthly scale. So be careful, like screenshotting this and looking at it. And this kind of points to the middle of nowhere, but on a weekly chart, it does point to a specific period and a specific candle. And the only one that's in yellow is the one right here. I was breaking 6,000 in 2019. I became bullish, but not as confidently as the other bullish situations you see on this list. And I explained the reasons for that in a video not far back. Maybe like, I don't know, 2 weeks back. And that's because I already felt that we went up a lot and a pullback was needed, but at the same time, I didn't want to miss the bull run. So it was kind of in between. So I was, again, kind of right, but I was also right that a big pullback was coming. So But everything else, I was as confident. The one that worked out the worst out of all of them was probably the last time I was super bullish. And if I go back to the weekly chart, I was super bullish right here at the break of this prior high at $50,000. I felt that the break of this $50,000 would lead us to a new high, which it technically did, but I felt that it was going to lead us to a much higher high, something in the vicinity of 80 to 90,000. Instead, we topped out at 68,000. It still wasn't bad. It was still like a 30% rise in Bitcoin, but I expected way more. That was a recap. We have a 4-hour MRI buy, and we're already moving up. I don't think these moving averages are that critical. We're not that far below them, so I don't see them as acting as big resistance. I will adjust this range because now we have a slightly better low. It doesn't alter much. No, I gotta hold the shift key. It doesn't alter much. I can even slide this up a smidge. There we go. So now we have a new range. And let's see if we now gonna head towards the top of the range. I'm optimistic here and I think this consolidation is good. And the more time we spend between 27.5 and 28.5, the better the breakout is going to be next week. GBTC closed at a 37% discount, which I think is grossly oversold, and hopefully we'll get back to zero sooner than later, and maybe by the end of this year. Let's take a look at how traditional markets closed the week. Oil managed to rebound on Friday after having a disastrous morning. Again, I was very surprised by the big drop in oil. So this is good. By the way, this was an incredible hearing. I'm going to point to it. Please subscribe to the Financial Summit channel. We are now up to 718 subscribers. I'm really shooting for that 1,000 subscribers. It will let us do a lot. It will allow us to do a lot more with this channel if we get to that 1,000 subs. So please subscribe if you haven't. We haven't posted many videos here, so it's not going to spam you. But we are going to post a few more testimonials from the last event very soon. So if I go to my history, this is always dangerous. Right here, the House Oversight Subcommittee on Strategic Oil Reserve. This was absolutely excellent and frustrating at the same time. I am gonna throw my bias in here that some of the Democrats at this hearing were like, I'm trying to find the right words to say, not to get banned from YouTube, but their new strategy in Senate hearings is to attack the panelists for being white supremacists. That is literally their only course of action. It's a complete disgrace. It happened here in the Oversight Committee, and it also happened in the one I finished watching early this morning, the COVID origin one. Again, the main focus of the Democrat questions was to accuse panelists of being white supremacists. That's that instead of asking them actual questions about their expertise, in this case, expertise on oil, the focus was you're a white supremacist. It's insane, completely insane. I found this incredibly interesting. It was this guy I really like. Her I can't stand, but this guy, whoever, I forgot his name. Man, what's his? I know this thing is like blocking their names. He's great. I've already heard him ask questions at several hearings, and this one I can't stand. Bush. I've heard her in several hearings now. Oh my God. Epstein, unfortunate name, was the one answering the most questions about the strategic oil reserve. And he should have been answering the most questions about the strategic oil reserve, because out of the three panelists, he knows the most. Out of the three, one of them didn't know anything. It was actually embarrassing. There was only three panelists. This guy was an expert at trading, actually, which is great. He's an expert in futures, oil futures trading, incredible knowledge, but the expertise was more Epstein. Though I would love to have this guy on like my show to talk about his 30 years or 40 years of trading futures markets, because it's super important. And the testimony from this gentleman, I forgot his name because it's covered up. It's Forbes. Guys, what the hell are you doing? Just like show people's names. This was embarrassing, completely embarrassing. He tried to make the argument that renewable energy is better and cheaper and should already be replacing all fossil fuels, which is insane. But I found this incredibly informative. I strongly recommend people watch it to understand the situation with oil and why oil price is potentially where it is today. I'm not going to get into the hearing, but I strongly recommend people watch it. And the other hearing that I finished watching this morning, which does not relate to the markets at all, was the subcommittee on the COVID-19 origin. And I gotta say, again, 20% of this hearing was spent talking about how Mr. Wade is a white supremacist. Again, nothing to do with the subject at hand. Dr. Redfield, his testimony was absolutely incredible. And what happens in every testimony is one of the parties, in this case, the Republican Party, started this hearing because the Democrats don't care about how COVID started. So this was a Republican-initiated hearing, and it looks like the Republicans brought three. Is there a picture of all three sitting? Here we go. Boom. Oh, come on. There we go. The Republicans brought three of the four, and the Democrats brought one. So this guy was clearly brought in by the Democrats. And in the other panel, same thing. Two guys were clearly brought in by the Republicans because it was Republican-initiated discussion over the strategic oil reserve. Epstein was one, and the futures trader was the other. And the guy that was saying that solar and wind is the cheapest and the greatest, and will solve all of our problems, clearly brought in by the Democrats. In this case, this one was neutral, but I'm pretty sure three were brought in by Republicans and one was brought in by the Democrats. And half the Democrats spend, it's unfortunate, the Republicans made a mistake. They brought someone on that the Democrats could just accuse of being a white supremacist. Whether it was founded or unfounded doesn't matter. It was a huge distraction. So that was a bad idea. And he didn't really contribute all that much to the discussion. The other three were doctors. And this guy, Redfield, the former CDC director, incredible testimonies, incredible. The other guys were, I mean, they should have just had him. That's it. They should have just had him and like Fauci and other people that were covering up COVID origin. Okay, and then there were other testimonies as well, like but anyway, this is off topic from finance. Check Bitcoin shorts. I don't care for Bitcoin shorts. I don't find those statistics relevant. I'm not a big fan of the put-call ratio either. Oh, I do need to take a look at something today on the charts. We'll get there. So oil rebounded on a daily. This is a very strong sign, very strong candle. And I think oil is going to go higher. Moderators, if there's any good questions or comments, throw them in. I'm trying to avoid looking at the chat too much. Look, I have my criticism of the energy industry. My biggest criticism of the energy industry is that the big oil companies buy up patents on better alternative technology and bury those patents and don't allow competition to really develop. I will criticize the oil industry all day long on suppressing new technology. But I will defend I will criticize the ESG initiative even more. The ESG initiative as standard rights is deadly. It is deadly to humans. The ESG initiative is killing people, straight up. And if my channel gets banned for that statement, so be it. Oh, he's saying ESG is dead. No, it's not dead. ESG is still, the ESG initiative is what is going to destroy Europe. I think there should have been a bigger investigation of the Event Horizon drill disaster, and some people should have been held very accountable. But they blamed BP for that, and it wasn't BP's fault. It was partially BP's fault, but not mostly. So yes, the oil industry needs to be safer for the environment. And if more people were held accountable for environmental disasters, maybe that would happen. So I certainly have my criticism of the oil industry, but I have a bigger criticism of the ESG initiative. Yeah, I am not a huge fan of nuclear energy. We've already had this discussion. Motorist and I debated. My main argument against nuclear energy is that I find humanity too stupid on average to maintain nuclear reactors safely. A disaster in the oil and gas field is not as bad as a disaster in the nuclear energy field, and I have not been convinced that humans have evolved to the point where they should be responsibly managing nuclear reactors. I'm not there yet. I won't deny that it's a great clean energy source. I'm just skeptical on like who's going to be in charge of a nuclear reactor facility. It's going to be someone for political reasons with zero qualification in nuclear energy. That's just kind of how I see it. If I trusted if I trusted the government to put the right people in charge of certain of certain industries, I would be more open to nuclear energy. I just don't see how the person responsible for a nuclear facility would have any reason to have qualifications in nuclear field based on some of the appointments that I've seen from the Western governments into certain fields, right? Like they're nominating people in law positions that know nothing about law and nominating people for like the head of the FAA that know nothing about flying an airplane. So it's I've seen those hearings too. That's my problem. Nuclear is only safer if the right people are managing the nuclear facility. Nuclear is very dangerous if you put someone who majored in, say, gender studies in charge of the nuclear facility. And that's kind of what I see from the current government. And that's why I am against building more nuclear power plants. Until I see the government putting people in charge that are responsible and know what they're doing, I will switch my view on nuclear energy. Okay. I mean, we just saw it in Russia, Ukraine, right? They were bombing a nuclear facility for months. They were trying to create a nuclear disaster by bombing a nuclear facility without even realizing that the wind pattern will blow into their own country. I mean, this is my problem with nuclear energy. They built one in Japan, like on the edge of the coast that got hit by a tsunami. Like, again, this is my problem with nuclear energy. If one was to be built in California, they will literally build it right on top of the San Andreas Fault in an area that is most prone to implode that nuclear reactor. And this is why I'm against it. Gold closed pretty well. We broke the downtrend line. And we are getting close to the highest ever end of week close. Interesting. Wow. Did we break it? That's very bullish. What was the close here? Close was 2028. Close was 1985. And close was 1983. Okay, so we have not yet really. This looks higher than this, but I could be wrong. Close 1985, close 1983.8. Okay, so we're almost there. We're almost at the second highest weekly close, but we are still like $50 away from the highest ever weekly close. That's incredibly bullish. This is taking place on a green star candle, and I think gold is going to go higher. S&P closed literally at triple resistance. It is insane how it managed to close right at the most critical point. So we know nothing about the S&P, and we have to give it another week or so. Not familiar with the squeeze momentum indicator. I have no comments because I don't know what a squeeze momentum indicator is. I like that the S&P is rebounding, but the S&P unless the S&P breaks the samurai resistance line, which has been in place since September of last year, which is now going on 6 months. Wow. Yeah, end of September. So October, November, December, January, February, end of March, 6 months. And it's going to take another few months to get back to it. So that's a very critical resistance line. And the moment we break it, I think the S&P is going to new highs. I don't need bread, guys. When I order a burger, I will throw the bun in the garbage. Oh, this was our look at Deutsche Bank versus UBS. Let me go back to looking at only one chart. Oh, so here's what. Nope, we're going to go back to looking at two charts. So on our recent spaces, Joe Carlosari and I slightly debated. So one of these needs to be Bitcoin. I'll put it down here. Well, it's a Bitcoin 3-month chart. Interesting. We're going to go daily. We might have to switch it to weekly, though. Joe Carlosari made a suggestion that Bitcoin is correlated to interest rates. I'm going to grab the 10-year yield. 10-year is the, oh, crap. Meant to do it up there. I'm going to make this bigger so that we can analyze it better. I almost want to make these line charts. So that means I have to make it smaller. I think a line chart would be better. Okay. So this way we're not being obstructed by certain things. Okay. No, I want to go weekly. I want to take a look at it to see if there's correlation. I can't tell on a daily scale. Weekly should do it. I'm going to go back. Well, we'll go back through the bull cycle. This doesn't look like it's log to me. This looks linear. Let's do log. Okay. Probably should have done this off air. Let's go to 2017. Okay. And let's see if there's any correlation. I'll start them both in 2016 on the edge to 24 here. I can make it bigger. 23. There you go. That's about even. Looks good. Both weekly charts. All right. And now I gotta drop this down a bit. So right here, going into 2016, we have a dropping yield. Where is, okay. We have a drop in yield. I want to make this red. Oh, man, hold on. Where is... I want to drop those silly lines. Why can't I do that? Why isn't settings showing up? All right, fine. I don't want to waste time. We have a drop in yield and Bitcoin is rising. Clearly rising. So that goes green. Well, I'm actually not sure what... Oh, crap. So is this a red line? Okay. Bitcoin was dropping here in the bear market. I'm going to drop the MRI. It's just in the way. Oh, way cleaner. Way better. I'm just going to put all the red lines in, right? Let's identify bear markets. See, this one is tricky. We definitely have a bear market here, and it's debatable what's happening here. I'm going to leave this for later. I'm just going to put the non-debatable lines. We were in a bear market here. Well, we're definitely in a bear market here. This is also debatable because it's COVID. So I'll save that. And the rest is bull market. So this whole thing is bull market. And I'll make this green. And now the non-debatable stuff. This is bull market. We can leave some stuff for consolidation. This is non-debatable bull market. And this is not debatable bull market. These things are debatable, whether it's bear market or consolidation. And I don't think the current situation is debatable. We are back in a bull market. Though that is debatable, but I believe we're back in a bull market. And these things are debatable. Now let's take a look at here. Independently, right? Not debatable. The yield is in a... Oh, crap. Okay, let's do the bull markets. Not debatable. The 10-year yield's in a bull market. Not debatable. 10-year yields in a bull market. Or rising. The 10-year yield's rising. Not debatable at the 10 years rising. That's probably consolidation. And not debatable that it's rising. But right now, I think it's debatable that it's falling. This might be consolidation. This might be falling. It's definitely not rising. And let's see where it's not debatable that it's falling. And then we're going to take a look at what this means. First, I want to draw the lines. I should save this as a standalone chart. Clearly dropping. We can consolidate over there. Right, and now we can put in levels of consolidation. And I make that yellow. Or orange. Orange will do. Right, this is consolidation. And we can say Bitcoin consolidated here. Ah, crap. And then start a bull market here. And we can say Bitcoin consolidated here. I mean, I want to prove Joe right. Joe Carlosari. So based on this, so 2016 clearly does not show any correlation. Interest rate went down, which means bond prices went up. It was easier to get money, but you're also earning less money. Here, the interest rate clearly went up and broke the high of here. And that means that you were earning more interest. It was harder to borrow money. It was more expensive. And bond prices, of course, drop the bonds that you have. And then we're going down again. So this entire area here, clearly the interest rate is irrelevant to Bitcoin during the bull market of 2016 and 2017 that happened through the halving. The bear market began over here while the interest rate was rising, and clearly the bear market in Bitcoin ended right at the top of Bitcoin. So this tells us that when interest rate rises, Bitcoin falls. That I can say is correlation. Then the interest rate fell a lot, which would imply that Bitcoin should be rising based on the correlation here in 2008. So we can see that the top in the 10-year yield was before the big crash in Bitcoin. So that already breaks the correlation quite a bit, right? Yes, Bitcoin was falling, but Bitcoin had a 50% crash right here, and there wasn't any kind of incident. There wasn't a catalyst. There wasn't an FTX. There wasn't a catalyst for this. No, very few people saw this coming. The only people that saw this crash coming were the TA people. This is where TA was right and fundamental analysis was not, because there is nothing in the fundamental analysis that called for lower prices. I was one of the few that follows mostly TA, and that's why I was able to call this crash very, very nicely off of the descending triangle in TA. But the interest rate tops in October, at the end of October, right before the crash in very early November. So we can't say that a massive rise in interest rate caused more downside to Bitcoin. So while there is correlation, a rise in interest rate causes Bitcoin price to go down, it can't explain the big crash unless it was a cumulative effect of rising interest rate and suddenly no one wants to borrow money and no one wants to buy into Bitcoin. You can make that argument. I'll be fair there. Bitcoin consolidates for a bit while the interest rate keeps dropping. Bitcoin price eventually goes up, but it goes up, and I was worried about it rising. There was a plus token Ponzi scam going on. That eventually imploded. Bitcoin was then going down with interest rates. And the Bitcoin crash came in line with the COVID crash, which dropped the interest rate even more. So while there is some correlation on the back end of this drop, there is some correlation on the front end of this drop. It's very, very minimal, and it's actually very specific to the Bitcoin cycle itself. I don't think this is interest rate driven. Just like right here in 2016 and 17, the interest rate goes down and up and then down, and Bitcoin continues to just go up and up and up and up. I will say that over here, while the interest rate was rising, Bitcoin was going up a little bit slower. And when the interest rate was falling, Bitcoin was going up a little bit faster. But nevertheless, right here, when the interest rate started rising, the big crash had already come, and this was more consolidation. If we use the daily chart, you would see that the big crash came super early. I remember that time. The big crash came quick. The daily crash was, the daily came in early, not late. The linear chart makes it look like the low price came late. It did not. So then the interest rate consolidates, Bitcoin price also consolidates, but it does rise nicely off the oversold lows. Again, Bitcoin has its own cycle. And now the interest rate is very clearly rising, and the price of Bitcoin is very clearly rising. So this is the opposite situation of what happened here in 2018. Completely opposite. Now, a rise in interest rate is leading to a rise in the price of Bitcoin. And then we have consolidation in the interest rate and consolidation in the price of Bitcoin. But if we do micro level, on a micro level, we have a drop in interest rates here. A little bit of consolidation, and then a rise in interest rates here. Well, let me go here. Right, so a drop in interest rates is leading to a drop in Bitcoin, and then a rise in interest rates. I hope you guys are on board, because to me, this is actually important to try and identify a correlation. So now we're once again in line. Interest rates are rising, Bitcoin is rising, interest rate is falling, Bitcoin is falling, interest rate is rising, Bitcoin is rising. And then interest rate continues to rise, and suddenly Bitcoin begins to fall. So this is where, again, the correlation breaks down. And I don't know what to say right now. The 10-year yield did drop, even though the interest rates are rising according to the Fed. So this is a very weird situation. The price in Bitcoin is clearly rising. I can't make the argument that the 10-year yield's rising. 10-year yield was higher back in October, even though the Fed funds rate keeps rising. So this is a little bit of a inverted correlation between the Fed funds rate and the rate in the marketplace, which is not normal. But the rate in the marketplace is what tells the Fed what to do. So this is actually an argument why the Fed is going to lower rates later this year. But I don't know what to say about the current situation. But clearly, I don't see what Joe Colasari is seeing. He will need to explain it to me again on Spaces, or maybe I'll have him on the YouTube channel, because I see absolutely no cause and effect here. I see a completely random, I see it as totally random, where Bitcoin goes up when interest rate goes up sometimes, and Bitcoin goes down when interest rate goes down sometimes, and Bitcoin does whatever the hell Bitcoin wants to do because of its 4-year halving cycle, and the interest rate flops back and forth. So this is me looking at the weekly chart. I can go to Joe Colasari's, because I wanted to do my own independent analysis before going. And I like Joe, and I respect Joe. Joe's a super smart guy. He's a litigator, a lawyer who knows a lot about economics and trading, a lot, which is great. So here's what he meant. And this is a daily chart. And he's looking at starting from November, and I can go and take a look at this on my own. So now he's looking at November daily, the 10-year yield versus Bitcoin starting with November. So let's go and take a look at that independently, and then I'll go back to his chart. I'm trying not to commit this to memory. So now we're going to switch to daily. But I'm on record as saying I see no long-term correlation. And daily, we're going to go specific to November. So this line no longer... Oh, man, I don't want to delete anything, though. I do want to save this. I want to save this, because maybe I'll show it to Joe later. Save. How do I save? Oh, I don't want to save layout. I want to make a copy. Make a copy. Bitcoin versus, oh, I guess I should say yield. Okay. I think it's still loading the data. And hopefully it will load my annotations. I did not load my annotations. That sucks. I don't want to draw those lines all over again. God damn it. Still loading something. Let's see. No, no annotations. Oh, there they are. Cool. Wait. There they are. Perfect. Perfect. Now let's go look at the daily. I would love for there to be a correlation because that would, could potentially tell you which way Bitcoin is going to move in the future. So we're looking specifically at November period. Starting with November, I'm going to line this up. Cool. There should be a way to line these things up. Like I want to sync them. So if I alter a time frame on one, it automatically alters the time frame on the other. I don't know if that feature exists, but if it did, that'd be awesome. Is this it? New drawings are replicated to all. No. If that feature exists, that'd be awesome. So this arrow is a bit in the way, but I don't want to move them. Oh, no, wait, I can move them. It's a brand new chart. I saved it as a Bitcoin versus 10-year. So now let's look at where the high in rates was. So the high in rates was either here or here. And it's unfortunate because in Bitcoin, we crashed. But this crash had nothing to do with interest rates. This crash had to do with FTX blowing up. So to me, this should have been consolidating the whole time. So for me, this is consolidation. This is not a drop because this drop had nothing to do with the general market. This drop was specific to an event, and then we consolidated for the rest of the 3 months. So while it's possible that we could have went lower if FTX didn't collapse, but it's also possible we could have started the bull market earlier if FTX didn't collapse. But I'm happy that FTX collapsed because if there are fraudulent companies need to go down sooner than later. So I cannot make the argument that the drop in rates caused the drop in Bitcoin. Clearly, the interest rates going down. Well, this is a green arrow, so let's do this. Clearly, the interest rate is rising here. And if we want to go micro level, the interest rate's rising here. And Bitcoin is rising here, but I want to do this. This was the crash to where? This was the crash to 20K. Okay. think this argument is going to break down super quickly. Because look where the high-end yield was. The high-end yield was on March 2nd, of 23. That's where the high-end yield was. And then Bitcoin crashed, pulled back to 20 with the yield, but now Bitcoin made a new high and the yield keeps going down. So I just don't see how this argument could be made. Sorry, Joe, I don't see it. Clearly, the yield's been going down since here, but during the time that it was going down, even if we say that the yield crashed here, Bitcoin was still falling into 20K, and now Bitcoin was rising with the yield, and now Bitcoin is rising again with a yield falling. Like I can't. I'm trying. I'm doing my best to agree with Joe's argument, but I just can't. And here the yield is clearly falling. And during this fall, Bitcoin is still consolidating and then rising, and then continues to rise with the rising yield. But meanwhile, I would say this whole thing was just consolidating the entire time through. I don't see it. I'm going to go back to, and over here the yield's clearly falling, but Bitcoin is not falling. Bitcoin is just consolidating. I can't agree. So I can't agree. What are the comments? What was his explanation? Oh, he just tweeted with no explanation. That's not helpful. I really like Joe. Hope he doesn't hate me for this. Yeah, I don't see it. Yeah, I don't see it, right? You can clearly see the top end yield on this one single line. And the yield tops, but Bitcoin is still falling a lot. And then it starts to rise. No. I mean, you can say that the yield is leading. Maybe if you move one thing over by like 3 months, you can try to make that argument. Maybe. So if I try to match the charts, so I guess I need to put lines here. Why can't I? March. So in that case, yield tops first. Yield tops and starts to go down, and Bitcoin follows later. So as long as yield keeps falling, Bitcoin will keep rising. So yield is leading. Yield tops a month early, not a month early, a few days early, and starts to go down. The Bitcoin starts to rise later. And then here, yield stops falling, starts to rise. So Bitcoin starts to fall, but then this takes you out of your trade completely. Because, I don't know. It's hard. I don't see it. I don't see it. All right, enough of this. Let's move on. Did I bore everyone? What are you guys saying in the comments? I really wanted to, analyze this. I don't see it. I don't see yield having to do with it. I know so many people are talking about yield when it comes to the whole world. And I know that there is like 10 times more money in bonds than in stocks, but I think it literally mostly affects the bond portfolios and the movement of people out of the bond portfolios to the stock portfolios, or out of the stock portfolios into the bond portfolios. I don't think yield itself affects other markets. It's a very contrarian view, but I don't think yield is all that important. And I will thank Martin Armstrong for making me see the light that yield's not important. And it's very, very simple as to why. Let's go back to single chart. The reason why I'm going to delete these lines because I now have them in the other place. The reason why yield doesn't matter is because you will borrow money. Let's pick, we're already on weekly. Okay. Here is the yield. Here is a 0.5% yield. And here is a 4%. Let's use round numbers. 1% and 4%. Here's why the yield doesn't really matter. Of course it matters, but here's an argument why it doesn't. You will borrow money at 4% if you can make 6%. But you will not borrow money at 1% if you can't make 2%. That's why. I will lend you money at 1%, but if you have no ability to make money off of this, you have nowhere to put it that will earn you more than the 1% you have to pay me, you will not borrow that money. It is meaningless to you. But if you have an investment that will make you more than 6%, you will gladly borrow money at 4% because you are confident in your investment will make you 6%. And this is why the yield doesn't matter, okay? If you think the stock market is going to go down in 2023, you will not borrow money at 0% and invest it in the stock market because you will lose. You will lose on the stock market, and then you will have problems paying back the debt even at 0%. But if you think the stock market is going to go up 10%, if you think Bitcoin is going to go up 40, 50% in 2023, you will gladly borrow money at 5% and you will put it into Bitcoin. But you will not borrow money at 0 and put it into Bitcoin if you think the bear market's coming. And this concept is just, it doesn't get through to most people. And like I said, I disagree with Mark Armstrong on a lot of stuff, but I also learned so much about basic fundamental things like this that are so common sense that most people just don't get it. They're maybe too common sense. Feather Frank writes, that's right. You borrowed money at a very low interest rate, you put it into Bitcoin, and you lost, right? Wouldn't you rather borrow money at a higher interest rate but win? And this is why the interest rate on these bonds don't matter when it comes to other markets. They matter for the bond portfolios. A rising interest rate and you holding bonds matters a lot. In the housing market, it also doesn't really matter. If you think that your house is going to be worth 25% more in the next year, you will go and borrow money at 8, 9%. And on the mortgage on that house. But if you think the real estate market is not going to go up in value, you're going to be scared to borrow money at 3% to buy that house. Yeah, Bitcoin DCA. Yeah, you timed it well, right? But what if you borrowed money at 0% and put it into Bitcoin at 50,000 just 6 months earlier or 9 months earlier? You know, now you're down 40% on your investment, and maybe if that loan was 4 or 5%, you wouldn't have done it. You would have been like, you know what? I'm not that sure about where Bitcoin's going to go. Maybe I shouldn't borrow that money at 0%. No. Bond prices fall as yields rise. If I said it the other way, it was by accident. It was a mistake. My point is that bond yields affect bond holdings and bond portfolios. They do not affect other markets. They affect them very minimally. Very minimally. If you're holding a bunch of bonds and yields start to rise, your bond portfolio is going to crash in price. I'm very aware of that. My point is saying that a rising yield makes the stock market go down is silly. It doesn't do that. Right. People were borrowing money at 13% to buy real estate in Australia. I stayed in this apartment. It was built right at I forgot the beach, Bodie Beach, right on Bodie Beach. It's an incredible apartment, and at the time, Bodie Beach was like a place for drug users. Like no one wanted to buy this apartment. It was like, I don't know, 50, 60,000. Incredible 3-bedroom right on the beach, and the interest rate was like 13, 14%. And I stayed at this house. It was my friend's someone that came to the financial summit. It was his dad that owns that house. His dad is like in his 80s. He was a doctor, and he's like, "Yeah, I borrowed money at 15% to buy this house at like $80,000." It was. Everyone said I was an idiot. Everyone said it was so stupid to do that. The interest rate was too high. The house was in a terrible neighborhood. And now that house is like $2 or $3 million. You will borrow at 13% if you think you can do more with that money. You shouldn't be borrowing at 2% if the only thing you can do with that money is lose it. I think this is the start of the bull run. I don't see this as a bear market rally. And that's mostly because of time. Time matters. We are in a very interesting time in Bitcoin. Look at the monthly indicators, the basic monthly indicators, RSI, MACD, CMF. They're super bullish. And like the RSI is getting a little overheated, but other than that, they're super bullish. CMF has so much room to the upside. MACD has so much room to the upside. It's only the RSI that is a little concerning. And according to time, we are in this cycle of going up. And I'm also on record that we're going to have a halving in late November. Sorry, November, what was I saying? Late March. Late March of next year. Not April or May, like people are, like now everyone is like late April. But a few months ago, everyone was saying May. And I was the only one that was saying, guys, it's going to come a lot sooner. A lot sooner. So this is my outlook. Either we go straight up from here and go into the 50-60 range and then pull back into the halving, or we go up slower and then rise on the back end to go potentially as high as 300. USA printing money and buying Bitcoin to destroy it, that they wouldn't destroy it. They would only make it stronger. I mean, the expectation is they would buy up all this Bitcoin and then sell it to crash the Bitcoin price. I mean, look, Bitcoin has had these exponential runs before. It would have been it's going to be a lot harder to push Bitcoin to $1 million than it was to do this. Like, I don't think the government can do that. Also, contrary to the belief, the US federal government is pretty damn transparent. Okay? They're pretty transparent. I have all the data, by the way. This was my pet project this week right here. Where am I going to stick this? I put it together in a readable format. I have this data going back, well, taxes going back to 34 and expenses going back to 62. So this is basically how much money the government spent on every single department. And this is how much money the government spent within every single agency. Oh, sorry, agency is the department, within every single function. And then you can go into sub-function right here. And then you can go into sub-function, right? I mean, you can get down to the department, like the $20 that some sub-department spent. So if the government's going to print money and buy a Bitcoin, it's going to be in the budget. It's going to be in the it's going to be there. Like, even the military has a certain budget. Yes, there are black budgets of money we don't know about, but trust me, we would know. If the US government started buying up a lot of Bitcoin, we would know. The UTXOs will tell us. But yeah, so now I got to figure out what to do with all this data. I want to make really cool charts to show you that the biggest problem the US will face and what will be the breakup of the, like, basically the end of the US as a world superpower is this: net interest. Net interest, interest on debt, is what's going to be the fall of the United States as a world superpower. You can see right here. And I spent a whole week trying to figure out how net interest is being calculated. I have estimates. Like, if you go to the raw data by sub-function. Actually, function and superfunction. I guess superfunction should be in front of sub-function. Over here, by superfunction, if we go to, hold on. Why is this so wide? Oh, crap. I didn't mean to do that. That's better. That's better. Okay, so if we go to net interest, where is it? Oh, this is function and sub-function. Sorry, function and superfunction. I was on the right tab. So if we go to net interest right here, and you look at the estimate, look at the estimate. This was the estimate for 2021, was $303 billion in net interest payment. What happened? It was 350. Let's look at the estimate for 2022. The estimate was 304. Look what it was. It was 475. The estimate for 2023 was 319. Do you realize that in 2023, we're going to owe, my best guess, over 550 billion in interest? Look at their low ball estimates. Okay, their estimate for 2025 was lower than what we paid in interest in 22. And look how they scale exponentially. By the way, the reason why there is a big jump from 26 to 27 is because these estimates were put together in 2020, and these estimates were put together at the end of the 2022 budget. I have the numbers from the estimates of the 2022 budget as well, and now all of these are significantly higher. But these were the estimates at the time. You see, the government never saw this as a problem. And we're already paying more. This thing is never going to go down. This has never gone down. If you just look back in history, well, I'm sure it's gone down like in the 40s and 50s, right? But let's look at the recent history. Net interest almost never goes down. It goes down so small. Right here, when they drop interest rates to 0, it goes down. Well, here it's the same. Here it went down by 8 billion because they crashed interest rates. And sorry, here it went up by 8 billion, my bad. Here, 2011 to 2012, it went down by 9 billion. Then it brought it all back 2 years later. It dropped by 5 billion, and then it went back up and beat this one. So they may drop on like a single year basis, but they always go back up and quickly. From 17 to 18, look at the percentage increases. 2020, the rate dropped to 0 again. So you saw the interest rate, the net interest drop a little, but then look at it skyrocket, 21, 22. The next few numbers, because this was the most unprecedented rise in interest rate history, this number is probably going to be $1 trillion. I think it's going to be $1 trillion by 2025. I think 3 more years. In 3 years, this would be $1 trillion. And they would have been 100% off. Do you know what happens when net interest is $1 trillion? Just look at the government revenue. And just look at the government revenue. Oh, I have those estimates also. So consistently, check this out. Revenue by source. They also have estimates. Here they are, right? So the estimate for 2021 was that the total revenue, that's this column, total government revenue for 2021 was supposed to be okay, so these, interesting, okay. Right. So the estimates for 2021 and 22 were made during the COVID year. So the government actually thought that they would make less money, but they made more money than they expected. That's surprising. Usually the estimates are lower than what happens. I have two 2020s here. I was checking my data. I had to delete that row. The government actually made a bunch of money in 21 and 22. Look at that. Total receipts. Where did the extra money come from? Income taxes. Well, oh, Joe Biden raised taxes. That's right. The estimates for 21 and 22 were made in 2020. So before it was known who was going to win the election. So the revenue was actually lower, but Biden did raise taxes. So the revenue to the government was higher in 21 and 22, and we got out of the pandemic. Interesting. Let's see if this lasts. Let's see if this lasts. So it looks like the government will be making extra revenue, mostly from taxing you. There's more money from corporations, more money from income tax, and more money from Social Security. Revenue did go up every year for the government. Interesting. So they are estimating they are going to make more money. So like I said, in 2025, I'm anticipating that $1 trillion is going to be spent on net interest. And there is an estimate that the government will make $5 trillion in tax receipts. Now, keep in mind that the government spent in 2022, the government made almost $5 billion, but they spent $6.2 billion. So they were 1.35 in the hole for the deficit. And I'm expecting net interest to be $1 trillion by 2025. And if you think that the war machine is going to take a cut in spending, that's insane, right? Because they sent all their old weapons to Ukraine so that they can start developing new weapons. So the defense budget will probably rise, especially with the geopolitics. I'm not very good at cooking and marinating steaks. I only grill them. I don't usually even marinate. I just take it out and I try not to freeze it and I throw it right on the grill. So I'm the last person to ask about that. All right. Hope I didn't bore you guys with this. I want to go. This is not where I expected this podcast to go. I think I've been doing this for like an hour and a half now. But please join us on Spaces. Twitter Spaces will begin in an hour on the Financial Summit Twitter. I will be one of the guests. I'm going to try and get Joe Colasari and a few other finance guys to come and join us. And we'll discuss. Also, inflation. I forgot to mention that. Inflation drove this number higher too. So with inflation, salaries are rising and governments do make more money. But with inflation, expenses also rise. So the defense will spend more money. Human resources will spend more money. Some things are adjusted for inflation. The Social Security payment is adjusted for inflation. So the human resources super function of the government will spend more money. So just because the government is making more money, if it's inflation driven, then the expenses are also inflation driven. And since expenses are higher than income, if you would add 5% to this number and 5% to this number, this is still going to grow faster. 5% of a bigger number creates a bigger deficit. Inflation would only favor income if you're running a surplus, but you're not running a surplus, you're running a deficit. So even though the government is projected to make a lot more money, their expenses are going to go up faster than the increase in money, because inflation affects these as much as it affects this. But the net interest is the one that's going to skyrocket exponentially. And this deficit right now, this deficit is consistently over $1 trillion. during the Trump years, and this is interesting. Look at that. Oh no, it did start with Obama. After 2012, the deficit was consistently below $1 trillion until 2020. In 2020, it was 3 trillion. In 2021, it was almost 3 trillion. And now it's back to being closer to 1 trillion. Now, I think that starting next year, it will never go below 1.5 trillion again. And the reason is net interest. Net interest alone is going to add an extra 150 billion next year, or at least 100 billion next year. And that would already push it to 1.5. And like I said, with inflation, yes, revenues go up, but expenses go up faster. And it's obvious that the Defense Department is going to demand a lot more money next year. And the current administration, which is unreasonably pro-war, is going to give them all the money they want. Quick peek at Bitcoin. I think we're just going to consolidate the rest of the weekend. Come join us on Financial Summit Twitter Spaces. Check out the Financial Summit and Unconfiscatable. And if you are looking to learn how to trade, please check out tonevays.com, on-demand videos, products and services, on-demand videos, where I educate people how to make their own decisions when it comes to trading. All right, thank you guys for watching. Do I have any comments? Oh, wow, I do. Could you look at NVIDIA? I thought I was going to look at all the stocks today, but I didn't. If that's the case, then Bitcoin is screwed. 10-year yield is bearish, engulfing on quarterly. I don't think the 10-year yield will stay bearish. I think it will rise. Has Michael Saylor ever done an interview with Tone? No, I've only met him one time. I was at a dinner that he hosted once. What happens to Bitcoin if Coinbase collapses? Nothing. Tone. Leonard Cohen, the answer is no. I just don't want to read the question. It was in Russian as well. I don't care about ordinals. I have no opinion. I couldn't care less. All right. Oh, I just missed the call. All right. I gotta call somebody back. Thank you all for watching, and I will see you all on the next one. Bye, guys. Someone is asking, what is Swan Spaces? Swan Spaces is something that takes place at 10 o'clock in the morning every morning. In order to know what Spaces is, you need to be on Twitter. When you are on Twitter, you will learn what Spaces is. There's also such a thing called Google. So all you got to do is Google Twitter Spaces, and it'll answer all of your questions. All right. Bye, guys.